Hello, beautiful people. How are you? I am the ACCA tutor, Mr. Tim Jerry, and in this video, we are going to extend our knowledge from the cash budgets, which we covered in the previous video. Here, we're going to look at this particular example with the emphasis of the computations involved. In the previous example, we were being required to prepare a cash budget on a month-by-month basis. But now, here, we are going to use the same principles, but the information required is per year, right, or the entire year. So we are not really being required to prepare a cash budget, but we are going to employ some of the ideas which we incorporated in the cash budget example we did in the previous video. Okay, so at the start of the year, James had inventories of $24,000, payables of $22,000, and receivables of $15,000. His cash balance was $10,000. Okay. During the year, James made purchases of $358,000 and had sales of $400,000. At the end of the year, inventories were $42,000, payables were $28,000, and receivables were $48,000. Expenses per month were $4,000 paid in the month incurred. So if you incurred, for example, telephone or electricity expense in January, it means you have to pay for those expenses in January. As simple as that, isn't it? How much profit did James make during the year? So here we are going to use the same principle we used in our previous example on cash budget. Please check out this video. All right, it is titled Working Capital Management, Cash Management. Okay, it's Working Capital Management 3. So please check that video and you'll see the computations. They're almost like the same. Now, what is James' net cash flow for the year? So here, you need not to bother yourself about doing the computation on a month by month basis, but you just have to incorporate everything for the whole year, right? For the whole year. And remember, we are required to determine the net cash flow. Net cash flow for the year. Okay. We know that net cash flow is the difference between receipts and payments. That's the idea, that's the logic. Then when we are talking of the profit, we are looking at the period performance, and this is the statement of profit or loss, where we start with sales, less cost of sales, less expenses, and then we arrive at the ultimate profit. Okay, so let's start with the sales information. The sales from the question, how much were the sales? So from paragraph 1, we do not have information for the sales, but information for sales and purchases are found in this paragraph, where the sales were 400,000 and the purchases were 358,000. So sales $400,000, okay, less cost of sales we start with the opening stock. The opening stock from the question at the start of the year, they were having this amount, right? So that was inventories. So that's the opening stock, 24,000. So we need another column. Sorry, I'm sorry. What's happening? All right. And then the purchases, we need to add the purchases figure. The purchases, we are told that they bought items worth 358,000. Okay, and we deduct the closing stock. Closing stock. How much was the closing stock from the question? We are told that at the end of the year, they were left with items worth 42,000. So we do the mathematics in this column, we add up and subtracting where relevant, and we will get the cost of sales figure of how much. That's 340. We can confirm with the calculator. We are simply saying 24,000 plus 58,000 minus 42. That's 340,000. Okay. Then we then get this. Remember, this is a negative because it is emanating from that operation less. Okay, so we are left with $60,000, and this becomes our gross profit. Then we deduct the expenses of the business. The expenses from the question expenses per month were 4,000 paid in the period incurred. And we know that the year has got how many months? We have got 12 months. So that's 12 multiplied by $4,000, and we get 48,000 as our total expenses. We deduct that one from 60, and we are left with 12,000 as our profit. So it's simple to compute the profit, isn't it? Good. Now, what about the cash flows now? How do you compute the cash flows? Let me try to tidy the place, or I'll use another pen color. Okay, I'll try to squeeze so that let's start from this end. Okay, let's determine cash received from suppliers. We're now on part B. So we can start with cash receipts from customers, not suppliers. Okay, or from sales. All right, so initially we had receivables of 15,000 at the start of the year. The assumption is they were paid during the year, isn't it? Good. So we include that 15,000 plus the sales which we made during the year, 400,000. Okay, then we deduct any outstanding receivables at the end of the year. We were told that at the end of the year, they were left with receivables worth 48,000. So we did not receive money in respect of these receivables. Okay, then we get the amount there. If we do our computation, 15 plus 400, that's 415 minus 48. So we are left at 367. 367,000 dollars as the amount we actually received as cash from sales. Are we together? Good. What about the cash we paid? The cash we paid to suppliers. Where can I squeeze this one now? I have any space there? Okay, let me just try. You guys, I hope you have a screenshotted these figures because I'm about to delete them. Sorry, just 1 minute as I tied up the place. Right. Now, cash paid to suppliers. This is the same principle you can use when you are doing your cash flows in financial accounting. It's almost just the same. All right, so we're going to start with the creditors at the start of the year. Okay, the payables, which were 22,000. So we do the same, 22,000 plus any purchases we made during the year, and we made purchases of $358,000. Then we deduct any outstanding payables at the end of the year. So at the end of the year, we were having payables of 28,000. So we're going to say 28,000 there. So let's do the mathematics. Let's use our calculators. Okay, that's 22 plus 358 minus 28. So that's 352,000. Okay, now for expenses, we were told that we paid for these expenses in the months in which the expense occurred. So the 4,000 every month was being paid in that month. So in the year, we got the total of expenses paid. That's $4,000 per month multiplied by 12 months, and it comes to $48,000. Okay, so what was the cash at the end of the year? Cash at end of year, which is the net cash flow. At end of year, we said this is the receipts less the payments, isn't it? So the receipts were how much? They were 367,000. 67,000 minus 352,000 minus 48,000. And this leaves us at with the calculator. Sorry. We're saying 367 minus 352 minus 48. That's 33,000. Okay, let's recheck. Is that 367 or 357? Oh, that's 367, right? So, where's my calculator? The same, 367 minus 352 minus 48. Yes. So we are left at 33,000. And this one is in negative. Remember, it was a negative figure. So you can just say negative 33,000, or simply just say 33,000 overdrawn. Okay, $33,000 overdrawn. Is that clear? So we are in overdraft position. I felt this example was very necessary for our learning. Okay, now let's move on to another aspect we needed. We promised each other that we were going to share. All right, so we are going to the Baumol model. The Baumol model. Baumol model. Right? Great. See you in that part of the video.